So here we are. As I mentioned, welcome to our market analysis webinar. We started with 3 markets last week. Commercial buildings, UK cleaning and security services, UK central and local government. Again, these webinars are available on demand. Any point you could go to www.baachurain.com/events, register, listen in to the webinar. That's it. And we also have a COVID page, COVID-19 specific market insights that also up and live. It will also be available in baachurain.com COVID-19. There are 12 plus articles, and on a weekly basis, we publish 3 to just see where we are in the market. So that's it from us. And the plan is, with whatever that's going through the market, growth still needs to happen at some level. So many projects, close to 11,000 projects have been outsourced in UK over the past so many years in multiple sectors. Our intention is just to break down those markets, give you a feel for the market, and also tell you that these projects have already been outsourced, some form of the other. They will come to market. Either it's coming in direct award, as we see in COVID-19 scenario, or it will be coming on tenders. We don't know, but it's there available for us. So let's go for it. So specifically, we had a 1 month into COVID-19, however, market reacted to COVID-19. There's a specific webinar on that, which was done April 22nd. That's also available. Please do go and view that as well, so you could see what happened in the market immediately after COVID happened. So many of you know us. That's where you are here. It started predominantly way back in 2015. When I was doing my freelance role, many of my friends from Onji are still here, and it started to grow from there. Projects increased, and me as a person wasn't able to do it. So gradually, we've started to build up intelligence on the market, because it was a huge market, but it was severely underreported. And what was available in the market was just the market research reports that was done by market research companies who didn't have real understanding of the market. By the time it was published, it was outdated all the time. And then you had companies, using cold calling and OJU trackers and stuff to get some tactical. So we came in between to try to fill the gap on a strategic level. And overall, there are some brands that's being done there. But either way, we are still a small company, work with people whom we know. But this is the first time in the past few months that we're starting to share what we know in the market. And it's moved on from service providers to investors. Lots of works on investors, giving them the assurance of where the market, and lots of work that happened on the buyers recently as well, from Crown Commercial Services on the public side versus many more office commercial buildings in the past 1-2 months. So I'm not going to dwell too much on that. Predominantly look at us as an independent view of the market. You know the market better than us because you are there doing it time in, time out every single day. But from what we know, what's publicly available in the market, from whom we speak to, we'll start to share some insight. That's about it. So that's a very simple thing. So we help the CEOs and MDs to provide an independent view of the market. In addition to that, we also support strategy, market, sales directors, and brand awareness, pipeline management, and also provide consistent insights so that they could sustain and retain their market growth. So that's it from me. And what we won't be touching is all these stuff, even though the slides on the right side doesn't have the tick there. It's still, we covered a lot of those in the previous webinars, but predominantly a very quick 1-minute summary is many of the employees are furloughed off, and both on the sales side and on the operational side, if the operations are not part of critical services. The cash flow supply chain difficulties have slowly been mitigated to a certain extent. Reallocations of resources, as I pointed out, from, if you're not furloughed off, reallocation of resources from non-critical to critical services like NHS, like telecoms, like critical pharma related projects have all happened, and people are happening. The sickness level from people who've been used 15% has come down to 6 or 7%. And yes, the market is on a standstill. There are many contracts that were supposed to come to the market, got cancelled, got renewed. And there's few projects that got renewed. Some projects got terminated. And you started to dwell more on this. These are all covered in our COVID-19 webinar. An important thing is from yesterday's note, workplace return. So people are now able to come back to work, what that means to us. Again, I touched many of that in offices and commercial buildings and related things there as well. So please do listen in and for detailed view on that particular sector. The way this whole slides will be covered is we will be just giving the buyer persona and immediately after COVID, what they are going through as we speak. Then we touch into our data points on how the market is manufacturing, what are the opportunities available there, and we gradually move into some of the tips in the market. So that's the whole structure. There's so many moving parts as we speak, and every single sector, regardless of who they are, what they do, are going through this as we speak. And especially the real estate companies, who many of my friends are, who is joining today, are in the forefront trying to design help, regardless of private or public, in helping the workplace and the people around the workplace to come and settle down. So there is a little tussle between the workplace FM companies and the traditional FM companies in how they are positioning themselves. And that's where FM market now is going to be pretty interesting in the next 3 to 6 months. The more workplace companies will move into FM domain, and the more FM companies will move into workplace domain. And we have to clearly see how the companies are positioning themselves, who they are, what they stand for, what sort of customers are they going to serve. That's a massive questions that's come out in many of the CEO conversations that we had in the past 1 month, and we'll try to do that at the very end of this conversation as well. We won't be covering all these things. We covered most of it in the offices and commercial side. Either way, lots of things that happens, and many companies have already come out with their own view of, hey, this is how the market is. This is how when your employees return to work, this is how we are going to safeguard your environment, by security, by cleaning, by building maintenance, all this stuff virtually through technology. How are we going to do it? Everybody's coming with their own view, but when everybody returns to work, and it will be tested. But for now, these are theory. But the important thing is, regardless of the market, these are the moving parts. And even if you're not doing that, having some level of handle on this will help, because if you're not doing that, your buyer, especially from our conversation with many of the financial services clients and one or two of the auto clients, meant that they are doing their own thing. They're procuring all this stuff. They're designing all this stuff, but they are looking for their FM providers to also be a partner in the journey, to help them design, revisit how they can run their whole service at the same time. So I'm not going to dwell too much on that, because nobody knows where we are on this. We touched this heavily in the COVID-19 webinar as well. What we see is there was a shock to the economy mid-March. Then there was a reaction to the shock that happened over the past 6 weeks. And now we are facing the reaction to reaction. The opportunities that will not be hitting the market, but will happen outside the market, is more or less this reaction to the reaction. As I mentioned, many buyers reacted like saints, which is like, let's renew the contract, let's come through it. But many buyers reacted as sinners as well, where they terminated the contracts, requested the service providers to run the same service for 20% of the value, 30% of the value, and some use force measure to terminate the contract. So what that meant is, from the buyer side, from the service provider side, there were lots of reactions that's happening in the market. I'll touch that at the very end. There is also pointers on many service providers are also looking into what their core market is and what the adjacent market is where they could operate regardless what they are currently playing in. What that meant is the reactional opportunities of who they are, what sort of type of client that they serve to, is going to create much more interesting marketplace. But for now, let's assume the 11,000 projects are there, and so-called top 80 suppliers control 95% of the marketplace. That is what it is. Out of the top 80, 2/3 are in some sort of financial distress even before Brexit, even before COVID. And this might have got even worse. If you look top 15, 12 are in the financial distress. So we all know that. So how they are going to come out of the COVID-19, where the top 80 is still going to manage it, we don't know. But for now, just note this down, which is like the reaction to the reaction of the market. That's where we are in, is going to come out with opportunities. So keep an eye on the market. This is what the note that comes out. The construction and manufacturing sector should be actively encouraged to go to work. So now for the next 15 odd minutes, we will try to go deeper on the manufacturing. We will touch the manufacturing, we will touch the pharma, and we'll also touch the auto sector. And what happened now? Then when we look at the opportunities, those opportunities are already been outsourced, whether it come for the same form, we'll also have a look. So the next one, what have the short-term effects on manufacturers? Of course, while speaking to your own customers, you might have got to stand on report on how your market is. But for now, from the public domain, from speaking to few suppliers ourselves, this is what we know. One end, the supply, demand, and workforce availability for the very first time, they tested after a long time. Let's say they go back to 1930s. 2008 didn't affect many manufacturers, but they go back to 1930s and say after a very long time, there was no predictable model that says this is the demand, this is the supply, and this is the workforce availability, which means the entire manufacturing needs to revisit what they do, how they do, why they do. And you can clearly see some manufacturers were lucky who are providing personal care, paper, for example, and pharmaceutical sectors, whereas the other providers, if you're an auto industrial, which was non-tech stuff, then they all were affected. So dramatic drops. And some numbers goes to like in the 6 to 8 weeks, the industrial sector alone lost close to £8 billion on revenue. So what that meant is, in addition to that, they also know that their supply chain is heavily locked. And because raw materials at some point to make a car, there is at least 40 to 60 journeys, depending on the type of car, that happens between the manufacturing unit all the way to Europe and outside Europe, and it comes back with batteries going all the way up from Asia. So those severe destruction to the supply chain, even when you open the people, okay, come back, let's open manufacturing, open now, the supply chain is severely disrupted and there is no way that's going to go be up and running. So the volatility is pretty high, even though South Asia came out before us, the supply chain is severely being hampered. So next is the unavailability of the workforce, which is like they don't have enough staff, and the people who are returning, they're expecting only 40 to 50% will be actually be coming through that. Many auto providers or many providers are moving into virtual shift, which is so unique to the marketplace, including the industrial players. When we spoke to them, what that meant was they are trialing something called a virtual shift. Virtual shift is more or less allocated to supervisors. It's not going to be available to everybody, where the providers are going to maintain the productivity level of their own staff by making them more effective, more focused, and even try to make them more productive by using real-time data, AI-based insights, etc., to manage the whole productivity. So some are looking into this, because the world has changed and it's not going to come back to the same normality. So some are removing their mid-level and moving back and retraining them, upskilling them towards tech workers. So what that meant into FM providers is they would be expecting the manufacturing FM providers to predominantly do the same in supporting their own clients. It's not that your cleaning is coming, your building maintenance is coming. How can you provide that sort of a real-time update inside the facilities management for their own facilities in the same level as the manufacturers are trying to manage their own production levels at the same thing. So virtual shift is a model that they're using. So if you are inside manufacturing industrial, at least use the word virtual shift. Virtual shift. Who is virtual shift? Who's frontline physically? Who's doing the job? So that's an important terminology that came out time and time again. So we already touched, many of the machines are already automated, but they are coming from outside. It's not being done. So what that meant is we already touched about the supply chains. The supply chains are pretty wide, and the supply chains have been structured in a way over the time, the just in production and other things. It's been going on and off. They don't have everything in one go. They done one part, goes to the second place. They add something, go to the third place. Third place come to the first place. First place then go to the fifth place. They have been doing this for a very long time. Now every single country, including UK, is encouraging domestic manufacturing, which they are not used to. And not all sectors are used to domestic manufacturing. Imagine cloth retailers, or imagine people who create domestic retail and other things, trying to create the same products here in UK. But there's no other way. They are moving into domestic manufacturing. It's not going to turn out in the next 3 to 6 months, but for contracts that's been renewed already in the market, this is the transformation that they're going through. In the next 6 to 12 months, they are de-risking their stuff and trying to see what are the elements that they could manufacture locally. What that meant is your account growth will be even more high. So if you have one client who's trying to do one build manufacturing warehouse facility, I'm sure they are planning to do multiple facilities locally, regionally in Scotland, in Wales, and here and there to mitigate the risk. So having that conversation, having that understanding with your existing clients, you don't need to go and bid projects outside. If you are in manufacturing, it's going to be growth. So your value of the bigger warehouse might come down, but it will go off in multiple regions, multiple locations. That's going to come out. Again, digitally savvy workers, not all the manufacturing sectors have this luxury of digitally savvy workers, but that's not going to happen. What that meant is there is even more possibility of FM providers, workplace companies to work even more closer with the manufacturing players to just decide how the future needs to look like. So many are already ramping up their consultancy arm, or many are already well placed to do that. But if you're not doing that, rather than to look into FM consultancy, FM energy, FM workplace have much more better growth rate than the traditional FM players in this marketplace. So moving on. I already touched this, the supply chain was a huge shock in the supply chain, and they are looking at much more diversified client base. So here, look, the manufacturers are looking at local manufacturing hubs. To have local manufacturing hubs, they are looking to have local manufacturing supply chain. So what that meant is, if you have a solid supply chain function, and if you can integrate that part of your manufacturing supplier supply chain, because you might have a much larger national level presence compared to your own client. So that's another way of looking into that, adding that procurement consultancy, adding that procurement supply chain element in addition to what you did in FM meant like you started to take control of even more spend from your clients than traditional facility services providers do. So this is, which means the stronger will get strong. That the strong players will get even more stronger in the marketplace, especially our friends in real estates and others who are much more solid presence elsewhere. They can bring diverse value towards the supply chain, and they will be moving on massively on this sort of domain. So if you then look into traditional players who had a luck, you can see automakers, you can see even the companies like Dyson, even moving into, okay, let's do PPEs, let's do respirator. What that meant is many manufacturing companies who are producing a lot more manufacturing stuff might come back and start to produce something very different. What we saw for the past 10 minutes is they will follow the status quo and produce the same thing. They will cut down the supply chain to de-risk it. They will look at local suppliers. They will look at local supply chains, and they will even look at local manufacturing. That's what we were talking about. But that assumes they are going to provide the same services for the foreseeable future, but many are already moving on, because this is one of the positive things. Like there were lots of negative spin on the PPEs that came from elsewhere, and there were many things that were sold 50 pence around COVID in early March. PP kits were sold at 50p locally, but many companies started to sell them up to 15 pounds. So this is PP kit per equipment. And there are rewashable PPE kits. So many companies have started to produce rewashable PPE kits. So either way, that sort of market, and now with the rules that the workplace people needs to provide a mask, needs to provide PPE kits for the employees, means there is this new massive manufacturing providers who are coming into the domain. They would not be in the supply chain for you. Their tenders might not be available as well. So having that understanding of who's providing PPE to your own manufacturing unit, start with that to your own company and trying to help them managing the facilities is another way of looking into this, because these PPE providers, good or bad, will be growing in the current marketplace as long as this virus is around. So I'm not going to dwell too much on that. What that meant is there are some huge bright spots for many companies who have repurposed their business towards healthcare and food related industries, to provide, what can I do to support food? What can I do to support pharma? What can I do to support healthcare, PPE, respiratory kits? It's not explicitly available, So everybody is doing everything, but having that understanding, if you already have your client base, that's what I always say, just see how they are doing to position themselves. That alone, that account growth alone is going to give you enough insights about what the market is, because nobody is going to predict. I'm not going to say the market is going to grow X. Everybody is going to redefine themselves. So a good starting point is go back to your manufacturing clients to understand what they are doing and how you can position from there. So very quickly on life science and auto before we move into the data points. So the pharma companies, as you know, they have massive global manufacturing facilities, particularly in China and India. But the good news is, there was initially shortage of medicines, but they managed to come out of it, and they started to produce locally themselves. So the life science manufacturing, the high growth, it will be coming out from companies who are going to diversify to companies who are going to see how much of their local domestic they're going to go. But pharma, as you know, virus, pharma, high growth. So that as long as the testing levels, as you can clearly see, the test levels was in the news recently, and we are still not 100,000 endorsed. Okay, we are doing test, but when will the results be coming? Who will be doing the results? The entire logistics part of it is outsourced to the traditional players, and then you have likes of Deloitte and others who are running the show. But either way, for doing the test kit, to analyzing the data, etc., life science companies still need to play a role, and that will continue for the foreseeable future. Which means if you're not playing in the pharma market, the important thing is find a touch point somewhere. You might have done your fit out, you might have done your lift maintenance, you might be having something that has connected yourself to pharma, even if you don't have presence there. And if you have the touch points, then that's the best way, enter the pharma market, because pharma market is going to continue to grow. And pharma is, again, it's a massive market in a way. I'm just jumping up front here. If you look at the $81 billion deals globally, at least 20% of those global pharma deals, at least, okay, let me revisit. If you look at the 80 opportunities that are $1 billion plus FM deals in the market, you can easily say who they are. It's IT, big IT services company like the Google, like the Amazon, like the Ubers and stuff, or it will be like the Pfizer's, like the GSK and the pharma companies. So that sort of global presence meant, if everybody is moving into their own local manufacturing, that bigger contract will get even bigger. So whether they'll be coming out into local contracts, it's a question mark. But if you're already doing the global contracts, that's, again, that account growth is going to be even bigger for people who are already doing that. Again, these are some of the pointers that they're already doing. They are providing medicines and health technology. They're providing diagnostics and health diagnostics, and providing NHS, even sending their medicines to the end user. Again, why the pointers are important: this is the market that's poised for growth, and these are some of the drivers or trigger point that tells you this is going to continue to be integral to the NHS as we fight these services. So if we look at pharma, okay, manufacturing is hybrid, as we touched. Pharma is high growth. Then we look into automotive. Automotive, even before COVID started to hit, those guys were already being hit by the Brexit big time. What that meant is many of the auto providers are already will be incurring close to 6 billion euros in annual cost because of the cross-channel trade. So at one supplier, I'm not going to name who the automaker is, they have, before they make the car, their parts goes 80 times before UK to Europe, 80 times, on and off, on and off, on and off. So I thought one car is made in one facility, everything is there, but it's not. For some reason, it goes, I'm not telling the car goes all the way 80 times. For some reason, the little parts goes there and fits there, comes back. Supposedly, the touch points between UK and Europe on the automotive sector alone, on the touch points, the way they have structured the manufacturing, it's already going to impact by Brexit, and they're already creating facilities bespoke here. But in addition to COVID, they're already looking to see what they're going to go for. I already touched some of the equipment that can't come here, but batteries. What that meant is if you are already providing automotive sector, it's going to be even big, which means the warehouses might get even bigger, and they will be looking at the same stuff as the traditional manufacturing side of trying to purchase locally, and trying to build it locally, with them, and the throughput will not be great. But that's how the sector is going for, which means manufacturing, industrial, and auto is going to have to reinvent themselves to survive in the market in the next 12 to 18 months. And we're looking heavily on the FM side to just see how you could partner with them on the journey, on the overall transformation. So it's a very important thing there. And the point here is absolutely clear. 2/3 of the manufacturing in automotive are furloughed off, and the chances of them returning to work um, in a virtual environment, which we touched there, it's going to be minimal. So not all 2/3 will be coming back to work, as you already touched about virtual shift and others. So there are sort of four components that they are trying to look there. Number one is how can we help reopen the automotive retail, the cars segment. If you're supporting only the warehouse, what can you do to support the retail function of them? Then next one is what can you do to ramp up to have a safe and sustainable production? Number three, what can you do to secure and support resilient supply chains? Number four, they already have a regulatory framework on doing that. How can you ensure that you can support them hand on that? So this is much wider than FM providers can you do, but now is the time to deepen the contract to do even more and try to improve your margins in this sector. So three things we already touched, regardless of whether pharma, whether it's manufacturing, or whether it's automotive or a chemical, you name it, they all need to wear protective gearings. They all need to wear comprehensive hygiene and social distancing measures. Some are doing it themselves, some might need your help. And this is where it's important for you to work with them to do it. But outside all these things, we already touched in the COVID-19 stuff. Many of the manufacturing units will need to go through recession like us, and which means they will have lower output, which means they will face liquidity issues, and most importantly, the demand for their product and services will be even low. So when the volume of the projects get delivered, there might be ancillary services on transformation that might come and hit. The right companies with wider skill base who are ready to support them on the journey might be able to get the same level of revenue, but with improved margins. But for others who do box standard FM services, just an outsourced contract might see their growth slightly tilted because of the sector. So that's a quick 15-minute rattle. I thought it's 15 minutes, but we have touched already 25 minutes there. Very quick on the snapshot. If you already listened to that, I suggest you go to our website, baachurain.com, and download the free report. That's close to like 20 slides, but I'm going to give you 7 or 8 slides that's relevant to this market, and then we will touch specific inputs from there as well. So there are many numbers that's floating around in the UK FM market based on different qualitative inputs. They interview people, they understand the market, then they write, this is the market. But what we have done over the past 4.5 years of building pipelines for many different companies, we built up a database of 11,000 opportunities, and we refresh them every month. So the value of the opportunities changes, as you can imagine. The type of service outsourced changes, as we can imagine. But the numbers, some projects get insourced, some project doesn't get insourced. New projects come up because of construction. But either way, the number, it's around 85 billion pounds. So 85 billion pounds covers 85% of private sector and 95% of public sector outsourced market, which means you can safely bet that the UK FM market is close to 100 billion pounds. So because we have some data gaps, and that's where we are. So what that meant is, this high level, this is the overall market. The average contract length is 3.5 years, but you would find in many cases that's not the case. If you look at offices and commercial buildings, it's close to 5 to 6 years. Funnily enough, in local government, it's close to 7 to 8 years. So NHS contracts, it's also 5 plus 3. So it varies, but on average, you're looking at 3.5 years. The key players, there are 80 key players, out of which top 5 covers 33% of the market. So who are these big players? Many of you whom we have worked with, many of my friends, let's say that way, are in all the big players, and that's how they structure themselves. So it'll be clearly seeing the workplace services, workplace technology, how they overlap with the traditional companies. But either way, as we stand, this is what these companies are doing. But whether they are going to continue to do the same or whether they're positioning themselves slightly differently, it's going to be their reaction to the marketplace. Some will move to become pure play, some will try to exit some of the market, some will go deeper in certain markets, but keeping an eye on them to see what they could do, and even getting the leftover of what people have decided to go for. It's a multi-million pound project in itself. So I'm not going to dwell too much on that. So point here is 85 billion is split across two parts, private and public. Our focus today is manufacturing, which sits under private. So you can clearly see 55% of the market is private, 45% is public. Unfortunately, people who pulled out of the public market, now they might be in a commoditized sector. They might make a margin of 2 to 3%, but you know what? Those are because the government mandate, this is the PPN 02. Every single public sector provider is being given up to 14 days, even upfront payment, which means most of the contracts are secure, except one or two, which is not coming from central government. But if you're running a central government contract, you are in a much more safer place compared to private sector. So how is the service providers, how the market structured by services? The market structured by services in multi-forms. You clearly see everybody procures it differently. It's entirely, and that's why it's amazing for the salespeople to still have the opportunity to go and shape the projects. So which means you clearly see at the moment, 85 billion, still 1/3 of the market is integrated FM. It's not as big as you see, and the market is still soft FM, hard FM, and some are other support services. Those are integrated models, where you're just manufacturing the supply chain and the FM, the technology part of it. Other than that, you don't do document management, you name it. Anything that doesn't sit in the traditional stuff, it sits there. And some, especially on the public sector, is uncategorized. That's the number that sits there, including so it's like traffic solutions, it's like parking management, all the stuff come in there for some reasons. Either way, the market is pretty wide open for you to shape, regardless of what sector, what service you are. So at high level breakdown of the market, you have offices, which we touched very early last week, Monday, I think, a Tuesday. So 25% is there. Then you can clearly see manufacturing, which is the second highest market in the private sector, then in the global side. So we touched central government and local government already, and we are touching manufacturing. You can clearly see the pattern. We are touching the number of projects, the volume of the projects that's taking up the maximum spend in the FM market. That's what we are gradually touching. Then we'll move into residential, housing, leisure, and every other things. Even if you're not operating in the market, just come over. At least I'll give you an overview of the market, so that if it's not for you, maybe later you can, if you do decide, it'll be helpful. So if you look at the private sector, as you can clearly see, close to 40%, 44% of the market is offices. Then you come to manufacturing, industrial, then you gradually move into the other market. So between offices and manufacturing, retail, they control 60% of the market. So 2/3, close to 2/3 of the market sits between these two. Then you have leisure. Leisure is nothing but, any other facilities, from all the way from museums to sports stadiums to cricket pitches, or you name it. Everything and anything is on the leisure side sits there. Then those are all closed as we can speak. And then you have energy and utilities. These are big, like utilities, big utilities. And then you have all the telcos and other things also come in there. So then you just look into the actual market. As you can clearly see, I would have dwelled much more deeper in the second webinar, where I talked about the 2020 opportunities in UK, where I go deeper on that. But for now, if you look at the number of opportunities that's coming to hit the market, this is based on what was outsourced, regardless whether COVID happened, Brexit happened or not. What was outsourced, volume of the opportunities, the number of opportunities that's going to come and hit are predominantly in these sectors. If we look at manufacturing and retail, predominantly there are close to like 350 opportunities there. As you can clearly see, not all the manufacturing warehouses, they published their information. Some might be outsourced, but at a local level to a local supplier, but it might not be published. But either way, with what we see in the published record, these are all some of the activities that's happening in the marketplace. So you can clearly see, regardless of which sector you play, there is a role for every single sector. But if you're a tactical provider who tend to bid a lot of opportunities, then you can see the number of opportunities are actually more in the sector. But what's even more interesting is every single provider or every single market procures different type of FM services at different levels. So if you look at offices, for example, yes, people say it's IFM, but they still procure, 30% is hard FM and 44% is integrated. If you look on the other side, on the leisure side, predominantly, as you can imagine, most of the leisure facilities require catering. So catering, cleaning, security, and that's where they are coming out with hard FM. For some reason, it's been either in-source or it's not hitting the market as much as it used to. That's it. So, but if you look at manufacturing, which is on this side, you can clearly see the number of opportunities there are also mixed, as a top market sector. You're going to say the integrated FM is still a preferred model, integrated with hard FM. If you're an hard FM plus IFM company, you have much more secure growth pattern. But with the new deep cleaning, but with the new swab testing, but with the new kind of thermal screening and other things, the soft FM players might have a much bigger say in how the whole workplace needs to be maintained, whole workplace needs to be structured and stuff. So as in, you've whatever the solution, use this time to see whether your solution is still valid. And as I mentioned, they are looking at a very different challenges as you speak, not just ramp up in the production as they used to, and what you can do to manage your pointers there. So let's look at the three different models here, just to give you a feel for it. If you look at the manufacturing industrial, and as I mentioned, it's going to be hybrid, depending on which sector. If the manufacturing and industrial is diversified enough to help the new growth in PPEs and other manufacturing stuff, it's positive spin. But if you are a cloth manufacturer based here, if it's a local one, then there is a much higher chances of it becoming big. But if you're a warehouse where we are predominantly getting stuff from elsewhere, trying to build it here to grow there, that might be slow market. But either way, it's going to be a hybrid market. We already touched it. But outside that, if we look at what opportunities are there, again, with over 300 or opportunities, this is what we see. It's a bigger deal. So if you look at soft FM in manufacturing, and which is cleaning, security, not much in catering, cleaning, security, you are looking at an average span of 5 years, and your average span of 4 years, and your contract value is roughly around £5 million. So considering the average value, or the much of the action happens between half a million, which is 500K, to £3 million, it's not bad for a soft services deal. Again, regardless for the integrated or soft services, this is going to increase more, and the value of the contract will increase because of what we are going through in the market. The next, if you look at integrated FM, again, the value of the contracts is slightly higher. As you can see, it's close to £6 million, but that varies. There are some contracts which is up to £20 million actually. Like, so, you can, the traditional players like airline, Airbus, and others who have places here, their contracts are slightly higher. Then if you look at again, unfortunately, this is a sector where the contract duration is slightly low. It's always between 4 to 5 years. Some contracts even have 3 years for some reason. And for another reason, these buyers tend to be willing to change their suppliers as well. If you already have a presence in these contracts, that should create some red flags, because it's not as sticky as you think in this sector, which means you could displace any provider in this sector. It's not as sticky like, I'm going to provide the services for 5 years, renew that, then again run for 5 years, etc. Unless you made it as a full-fledged integrated FM contract end to end. But even now, there is a chance to displace even more clients, even more service providers on this. Then if you look again, the average contractor, regardless, it's still around 4 years, but the hard FM maintenance is around £3 to £3 million, whereas you saw the integrated FM close from 6 million top onwards. And the number of contracts, with all the numbers, it's slightly lower. It's around 20. But as I mentioned, not all manufacturing hubs who have these services actually publish in the public domain that they have outsourced, etc. So the numbers might be slightly higher. So that's the pointer. So as a sector, manufacturing is going for a tremendous transformation. So whatever you do, as long as you have the right level of information about your client, I always say, forget about what the market says. You might already have your own. You might already have your own information about who's currently doing these services, including your subcontractors or others. Try to get that information straight from them and position your market around those areas. So what we see here is there are at least, we know that there are 11,000 opportunities from our database, out of which 1,250 are going to come and hit the market, and out of which at least 60 opportunities will be coming out from this manufacturing cycle going forward. But that's assuming that they haven't been renewed or they haven't been terminated yet. There are lots of touch points, as I mentioned, on the other side to have a much bigger, safer environment, which I'm not going to dwell too much on that. And I'm sure your teams are already working hard on that. It's about how can we go for disinfection and security in this. That's regardless of who you are, the high growth area. Your services on deep cleaning, swab testing, thermal cameras, what can you do to help it as even more secure environment? Physically, if there is a staggered break in running the workplaces, turning the warehouse, what support can you do to the facilities to ensure that you're going to have? Many companies are coming with the reports, but in the auto sector and in pharma and in industrial, they're also coming with their own reports. It'll be interesting to see how much of the reports are actually tied up, work jointly with the FM players, and that's what it's going to be. It's going to be critical. The important point here is there will be lots of reactional opportunities because many employees will not go to work unless it's safe. All you need is one more wave, and many of the properties might not be in the same way as it is before, and many of the companies will deal with it differently, which means that interaction between the people, the property, and the service provider and buyers will create opportunities in the future or immediately now as we speak. And those opportunities will not be coming to the market as public as we want it, because if public sector can give direct awards, why not private sector? So what we have here is, there are at least 300 opportunities, as I mentioned, out of it 60 are according to the tender timetable it's going to come out with. And many, as you know, who are originally planning for bigger investment now to justify why they need to invest those money. But you know what? If you can position yourself as a trusted partner in doing this, maybe you can get some of the investments and you can go with that. But the biggest challenges you can face is there will be many local players who will be hitting the market. Yes, some might not survive this, but there were many people who are tech-enabled, might be in a better position than you to share, this is how we can work with you, and this is how we can do that. Again, wait for that turn to come and hit you as well, unfortunately. Or you can look into that sort of local players who have the technology, who have the local presence, and bring them part of a supply chain or bring them part of even partnerships if it's required, if they have something really cool to work with you. So we are not going to dwell too much on that. I've touched already. And these are the few things that I suggest we do before we close the call. There will be disruptions in the current and future bids, and market at the moment might wake up around 6 to 12 months time. But what that meant is early 2021, there will be a lot of projects that might be hitting it because every project might be renewed. Think about your capacity. Think about what you can go for. 100%, if you haven't done this, I'm pleading, please do reach out to your current contracts, understand the pain points, and you extended the contract, but don't just stop there. Try to go deeper on that, because it's important for you to learn how your current client perceives the market, understand what service provision might be working for them, then come out and make that as a value proposition for future bids. If you haven't done strategic planning, please do, because the growth won't be at the same level as you forecasted in the past, at least in February. So, what markets are you going to play? What sort of opportunities? Very simply, this is the question. Define the business you are in. This is what I've currently got. Define who are your current customers and who will be your current customers. Think about your brand positioning and account planning. pipelining, etc. And I'm sure most of you already restructured your team, but those are the few things that you can do immediately while the market trying to create its own clarity. So whoever you are, what do you do? There are close to 100 plus facilities people who have passed their lives. And around, we have Wednesday World FM Day, and we are launching a candle. And if you can, please do join us on this, because whatever we do, regardless of what are the market you play, these are the people who are wearing all the PPE kits and other things to serve their community, to serve their country, to serve even the company at a much more risky level on a courageous basis. So let's respect for them. So the resource center is up and live. Please do every now and then chip in, and if you are subscribed to us, the information will be sent to you on email. But if you want, there is also time that we can sit down with you to do the 4 questions that I ask us, what we call boardroom. We've already done with 4 service providers just in the past 3 weeks, just to bring that independent stuff to just say, you know what, I'm a bit confused. I don't know where the market is. Please, can you provide some clarity? We'll share whatever we know and we'll help you with that. But otherwise, just to review my pipeline, do I need to spend all this stuff now, or do I need to keep it later? Just stress test my pipeline is also something that's of interest to many people these days. So you're also looking into that. But either way, the reactional opportunities, it's going to be 100% driven by you. I'm repeatedly telling it's not going to come to the market. It will be based on your awareness of the market, your awareness of your company, your awareness of your own buyer. Spot that opportunity and see how you can fill the gap quickly. And that's it. That's gold for you, because most people won't be doing that, because they all will be waiting for a tender to land. But many of the tenders are not going to land. Even if it lands, it's going to land later. So that's it. So pointers, I can dwell deeper and deeper on that. As I mentioned, many of the suppliers, if they are lucky enough to go through this crisis, might be able to decide what their strategy is, but not, some unlucky people are still fighting hard for their own survival, because the market is a low margin business and they have been funded heavily by the debtors or by the equity providers for a very long term. But for them suddenly to get even more funding to sustain a market where the whole market is kind of shut down is not a great way. So you might get some unfortunate news from you guys, or you might be lucky enough to acquire or consolidate your own competition, or locally or regionally or nationally or internationally. You never know, but keep around that. But big or small, what's going to be important is your ability to react quickly. It's ability to react quickly, sector by sector, follow what trends are happening, pick up that one client and just go from there. But if I don't hear from you, I'll just close the recording, have some questions with you. But one more, we are going to look into schools, colleges, universities tomorrow, and we have Thursday, Friday, and we have a hard FM deep dive on 15th May. Some of the content might be slightly similar, but most of the content are just we just pulled it based on the market as well. So I'll be so looking forward. If you can, please do pop in